Hello folks, this is Nick Foulks with Drake and Associates. We have our educational economic update for September 2016 ready for you. In this month's video, we will discuss some major headlines that influence markets in August and give you some insight into what they could mean for you as an investor. Stay tuned. At the end, we have a required disclosure statement. Markets rallied for much of August on a better than expected earning reports and some strong economic data. However, official statements showing that the Federal Reserve is moving closer to raising interest rates again gave some investors pause. With the bulk of corporate earnings in for the season, we have a pretty good picture on how the U.S. companies performed in the second quarter. Looking at the results from the S&P 500, we see that overall earnings are down 3.2% on revenues that are up by 0.1%. While lower profits aren't good, corporate managers did a good job managing expectations. Over 72% of companies beat their earnings estimates, and just over half beat their expected revenues. The stock market treated most of this news as a win, since traders had surprised themselves with those results. The Federal Reserve was also the source of a lot of market activity last month. Minutes from the July meeting on the Open Market Committee show that the Fed economists are pretty much split in their opinions about the economy and interest rates. Fed hawks, those who want to raise the rates soon, believe that the economy is strong enough to withstand higher rates as soon as September. Fed doves, or economists who favor a more cautious approach, aren't convinced that the rate hike needs to happen quickly. They think that low inflation and global concerns mean that the Feds should wait and see. We and most of Wall Street analysts don't believe that the Fed will raise rates in September. However, there are reasonable chances that they might act in December. If the labor market continues to improve and economic growth looks solid, we could see higher rates before 2017. Speaking of economic growth, we got our second look at the gross domestic product growth at the end of August. The first estimate, which showed growth at 1.2%, edged down to 1.1% in the second report. Why? Broadly, while consumer spending ramped up last quarter, business spending pulled back, leaving economic growth kind of stuck in neutral, if you will. What this means for the consumer spending is the largest factor in the U.S. economic growth kept the economy going. Businesses took a look at their shrinking profits and closed up their wallets. What can investors expect in the coming weeks? It's likely that we'll see some more volatility and perhaps even a pullback as investors digest data ahead of November elections. The Federal Reserve votes on interest rates this month, and that could also add some speculation. As always, we'll keep you informed. If you have any questions or concerns about what we've discussed, please give our office a call. We have some upcoming Social Security classes, September 21st and 22nd at the Wauwatosa Public Library. We also have retirement classes at Mount Mary University. You can visit our Wealth Wisconsin website and learn some more, and make sure that you listen in to Retirement Ready on 6:20 a.m. WTMJ Saturdays at 1 p.m. Once again, this is Nick Foulks with Drake and Associates signing off for the month of September 2016. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please just give us a call. We'd be happy to talk with you. While we believe that the information we report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investment advisory services are provided by Drake and Associates, LLC, a state of Wisconsin registered investment advisor. Insurance products are offered through a separate company, Loft Financial Advisory Group, LLC, a Wisconsin insurance agency. Clients are under no obligation to purchase any recommended insurance products.